Yo, hey, sorry, I noticed that yesterday the video is hella close to my face, and it's possible that that's gonna happen again because it's not really something I'm consciously doing, but I'm sorry about that, and I'm sorry about it if it happens here too. I think that maybe for the time being, honestly, what I want to do is I just kind of want to like talk about what I'm thinking about every day, maybe, and just like maybe that'll just take me to where like I want this to go based on you guys' feedback. So if you comment down below things you like and don't like about what I talk about, or things you want me to talk about, and I will preface this by saying, try and not make it so much like about like one thing, make it like subjects, like something that you wonder, like how do I see something. Don't just be like, when is AMC gonna go to $100,000 a share? Like you know what I'm saying? Like I'm not gonna make a video about that. If you watch this channel, I think you know that. Anyway, yeah, so today, and this is not me celebrating or anything like that, but today, SPY obviously basically gave back the entire move of the previous day or two. Went from like 429, now it's trading, I think it's like 413 right now. There's still a few hours left in the session as I'm recording this, so but like I said yesterday, the fundamentals of the market haven't changed that much, so I do have reservations about continuation in a bull market. Now, at the end of the day, it is mostly technical in my opinion. I know that the fundamentals matter, but like I think that the technicals are a better way to view the fundamentals through, because it tells us how institutions are actually perceiving the fundamentals, if that makes sense, right? So they create these fake outs and these sorts of moments, but at the end of the day, the result from composite man's side is the same. So technicals are a pretty reliable way to see where price action can go. And honestly, a few days ago, I kind of opened the can of worms as to how SPY, not only, and I've been talking about 350 for SPY for a long time, but not only that low, but could go as low as like $180 from a technical perspective. And a lot of people told me that they thought, if that happens, the world's over, stuff like that. Look, SPY was $180 like not that long ago in the grand scheme of things. It's not normal, okay? That's the thing about this market now. It's not normal for a market to increase 100% in value pretty much in a straight up line over the course of 10 years. It's not normal. When you see these numbers about how the average return of the S&P 500 index is about 8% a year, that is over the course of almost 100 years, maybe more. And so that is the average. But within that average, there are major recessions that occur. You have a lot of sideways trading, and like you saw, going into the 70s, like in the 60s, the chart is pretty flat after you got the boom of the 1950s after World War II ended. It's not normal. Okay, like people are so used to it now that the stock market just goes up. But that's just not how markets actually function, historically speaking. So I'm saying all that to say, and I mentioned this in my Discord, I might remember to put the link to it in the description of this video, but if it's not there, because I forgot by the end of this ramble that I'm about to do, or however long this goes, I don't know, it could end right after this, but every once in a while I pop in there, and I said earlier today that, honestly, the healthiest thing that can happen is SPY goes back to 350. If from here, SPY just rockets, okay, from today, just rockets, and it goes to 500, and it goes to 600, or whatever, over the course of the next 3 years, or whatever. In my opinion, that is actually, it reflects poorly on the U.S. economy, because I think that, at the end of the day, a successful economy, at least by the American standard, over the course of the last 100 years, is one that is inclusive, and that, you know, the middle class has the opportunity to participate in. And when markets increase violently in value, there's no, again, I mentioned the 18-year-old kid that I mentioned yesterday, right? You turn 18 today, I feel like it's much harder for you to grow wealth. It's going to be much more difficult too, in my opinion, than it was 10 years ago. And that's a reflection on the economy at large, in my opinion. And to give you an example of this, if you're not really understanding why I'm saying that, because at the end of the day, equities are the same as real estate, are the same as currencies. It's all just an exchange of value, right? And that value is speculative on a day-to-day basis. And so, look at the housing market now, and tell me, the house, if you're an adult, the house that you might have looked at 5 years ago to purchase, and what it would have been worth at that point, versus today, right? And if you're on a salary, how much can you still afford that? And if you can't afford it, based on your salary increasing over the course of these years, if you can't afford it, can you afford it as easily as you could back then? My assumption, okay, at large, is that you can't. If you're in the same kind of tax bracket, right? And so what I'm pointing to here is that it is going to be much more difficult for people who are graduating high school right now. It's graduation season for high school students, right, in May. For people who are graduating high school to get into the workforce, for them to own real estate is much more difficult now than it was. Just like it is more difficult to own the S&P 500. Now, you can buy it much more fractionally than you could. But at the end of the day, the value is so inflated compared to what it was in 2012, 10 years ago, right? And I think that there's something to be said about that. Because if you've been in the market for 10 years, then you understand that the risk of you buying at the top and suffering loss increases exponentially as the value of equities increases like this. And by exponentially, I mean literally exponentially. Like, if you're familiar, if you've been on the financial YouTube outside of technical analysis, like Graham Stephan, those sorts of financial YouTubers, if you've been consuming this sort of content for a while, then you might be familiar with him and how he talks about, and it's a common thing, it's not just him, but compounding your compound interest, essentially, right? Like, wait, I think what you use is a compound interest calculator. If you Google that, and you put like a number and like say $10,000, and you put a 10% return per year on it. Basically, the idea is that your gains compound on top of each other. Well, on the other side of that, sorry, I keep having to clear my throat. I'm drinking black coffee. I don't really understand why why my throat is all congested. But anyway, if you think about that in reverse, right? Compound interest, it sounds really good when you're at lower terms and you're buying at a lower cost. But in reality, what's also happening on the flip side of that, and this can happen forever, who knows, okay? Not a financial advisor. I'm not trying to predict the future or anything like that. But if you're on the other side of that and you just graduated high school, the past 10 years has been an epic example of compounding value in the stock market. And so what that means is that the chance of regression and seeing loss is exponentially greater today by the same method of it being great to take profits now, not financial advice again, but I'm just saying, and it could go on for another 10 years. That's why I'm saying, like, look, they can keep kicking the can. Like, we all know this. We've seen them do it before. But I'm just saying that the risk today is undoubtedly exponentially greater to people entering, new entrants into the market today than it was 10 years ago. And it's not because it's inherently more risky, right? I think that dollar cost averaging for most people is the best way to participate in the market. And buying and holding and having a plan and buying every Friday whenever you get paid over the course of time, picking a few stocks that you like, right? Having those, that's your more risky portfolio, and you really believe in these companies for the future. I think that's great. And I think that over the course of the next 20 years, it's going to certainly pay off. 100%. I have no doubt about that. In my opinion, not financial advice again. Can I get in trouble for saying that? That doesn't sound... I mean, anyway. That's just kind of like what I'm thinking about. I say all that to say, you really, when you're thinking about the fundamentals of the economy, and specifically here, the investment economy, it's important that you look at it through the lens of opportunity versus risk. And you assess the economy and say, is there more opportunity today, real opportunity, and health in the economy today than there was 10 years ago, right? Because when we talk about $170, $180 SPY, that is the price, like, you know, that is kind of the relative price point that we're talking about, you know? So, just something to think about, just throwing it out there into the ether, what you do with it. Maybe I'm an idiot. Maybe you'll reply to this and you'll comment down below and say, wow, what an idiot. It's totally possible. But I don't think anybody's really thinking about things through this lens right now. All I see is either doomsday, which, by the way, most bears that I see on social media don't really have a true understanding of why they think that the world is ending or whatever. They don't really have, they have a few like talking points that they use, but they don't really understand why it's actually healthy and important for the market to regress, to test lower support levels, to confirm itself. And also, for new entrants in the market, it's a beautiful thing. you know, because that 18-year-old that's just getting out of high school may come out at the right time and see that opportunity when everybody else is screaming and yelling about how the stock market is a scam and they lost 30% of their retirement or whatever. That 18-year-old can look at the history now. If SPY goes to 350, just for example, I'm not saying that's happening, okay? They see that and they might say, and they might look at the history and say, this is an opportunity, you know? And they might be saying that now. And when we look back on this, maybe the 405 or whatever it tested a few days ago, maybe that ends up being the local bottom. And we'll see. But, yeah, like I said, I think for most people, dollar cost averaging is probably, you know, having that long-term view, figuring out what you think is going to be here for the next 5, 10, 20 years, and having a long-term view and just, you know, putting a little bit here and a little bit there over the course of time. It really adds up quicker than you think. It does. And yeah, having that conviction and telling yourself, you know, before I like get new debt, or I borrow money, or get new bills, or buy whatever, you know, the new pair of shoes or whatever it is, paying yourself first for the future, you know, and buying a little bit at a time. You know, that's kind of the way that I think most people can benefit the most from the market. And there's going to be hard times. And it's going to go down. You're going to see the numbers on the screen, and it's going to make you sad sometimes. It will. But, well, assuming the U.S. economy doesn't completely implode and the world as we know it doesn't end and a bunch of weird stuff doesn't happen, I think in 20 years, it'll probably pay off, in my opinion. But yeah, so I know this video is kind of all over the place. Hopefully you enjoyed it. Maybe I should like call these videos something or something while I'm trying to figure out what direction I want to take things. But hopefully you enjoyed. What time is it? I don't know what time it is again because I can't see a clock when I'm recording video, and my car isn't showing time for some reason either, which is weird. But appreciate you guys. Thanks for watching the video until the end if you did already. If you didn't already, make sure you like the video and comment your thoughts down below. Let me know what are some subjects that you haven't heard me talk about that you would be interested to hear me talk about, and I will entertain all ideas. Appreciate you.